The financial markets are entering another critical phase, and investors are watching every major indicator closely. Let's start with the US stock market. The S&P 500 and Nasdaq remain close to record highs, supported by strong corporate earnings and continued enthusiasm around artificial intelligence. Technology companies are still leading the market, but we're also seeing profit-taking after the recent rally. Rising treasury yields and higher oil prices are creating some short-term pressure, making investors more cautious. Now let's move to crypto. Bitcoin is trading in a consolidation range after its recent recovery. Buyers are still defending key support levels, but the market needs fresh momentum for the next breakout. Spot Bitcoin ETF flows remain one of the most important indicators. While there hasn't been a wave of panic selling, inflows have also slowed compared to previous weeks. That suggests institutional investors are waiting for stronger economic signals before increasing exposure. Ethereum and many altcoins continue to underperform Bitcoin. Capital is still concentrated in larger, more established cryptocurrencies, while investors remain selective with higher risk assets. On-chain data paints a relatively stable picture. Large wallets are not showing aggressive distribution. Exchange reserves remain balanced, and there is no clear sign of widespread panic. However, trading volumes are still lower than what we'd expect during a strong bull run. Over the next several days, the biggest market drivers will be U.S. inflation data, labor market reports, Federal Reserve commentary, ETF flows, and any unexpected geopolitical developments. These events could significantly influence both stocks and cryptocurrencies. Overall, the medium-term outlook remains cautiously bullish. If economic data supports expectations for lower interest rates and ETF inflows improve, both U.S. equities and the crypto market could continue moving higher. But if inflation surprises to the upside or bond yields climb further, expect increased volatility and possible short-term pullbacks. As always, stay informed, manage your risk, and never rely on a single indicator when making investment decisions.